Hey everyone, how's it going? This is Richard from TraderLion, and in today's video we'll be talking about a really important subject, how to do a yearly post-analysis review. And this is really an essential step to becoming more profitable and consistent because it allows you to identify your strengths and weaknesses so you can address them into the next year. So here's what we'll cover in today's video, and I've kind of broken down your post-analysis review into 5 different steps. Step number 1, you want to calculate your trading statistics, so your batting average, your average gain, average loss. Step number 2, you want to go ahead and review your equity curve and compare it to the S&P 500. Step number 5, you want to review your best and worst 10 trades. Step number 4, very similar to that, analyze and mark up the 25 best names from that year. And step number 5, lastly, reflect, identify areas of improvement, and set goals for the upcoming year. And we'll go through all of these different components in depth in this video. And step number 6, we'll talk about the key takeaways that you should really remember about your post-analysis routine. So getting into step 1, let's first talk about how to calculate your trading statistics. And when I talk about trading statistics, I'm really talking about these metrics right over here, but obviously you can add as many as you want. First up, we've got your batting average, which is your percent of trades that are winners, also known as your win rate. Number 2, your average gain, both in terms of percent as well as dollar amount, and basically the average outcome of a profitable trade. Similar to that, your average loss. Then I think it's also really helpful to analyze your average holding period for winning trades, your average holding period for losing trades, and also calculate your gain to loss ratio, which is basically your average gain divided by your average loss. And these are kind of the core of the things that I think you should analyze. And there are basically many different ways to go ahead and actually calculate these trading stats. A tool that's available to everybody is Microsoft Excel or Google Sheets. It's pretty easy to set up a template in those different softwares. I've got a kind of video tutorial on that, which I'll link above right here. But there's also different softwares out there that also keep track of this for you. And also you can label your trades based on setup, that type of thing. So go ahead, explore, find what works best for you. But I think it's definitely very helpful to be able to break these down by the setup that you use, also by the time of day of execution. So for instance, looking back at the setups, you realize that all your profits pretty much come from setup A. Your win rate is much higher with that type of setup. Your average gain is much higher as well. But you look at setup B, and you realize that your batting average is very poor with that. Definitely going to the next year, you want to focus more of your attention on setup number A. So it's pretty self-explanatory, but you'd be very surprised how if you didn't do this work and actually look at your numbers, you might not realize that the trend in profitability is very clearly skewed towards setup number A. And very similar to that, as I mentioned, I think it's also very helpful to keep track of the time of day execution. And similarly, if you see a trend where if you make a trade before 10:30, your win rate's only 20%, that might factor into maybe a rule that you implement in the coming year. So stuff like that is really great to see and look for those trends in these trading statistics. So moving on, let's talk about how to review your equity curve versus the market. And very similar to actually looking back at a stock chart, you can analyze the overall character of your equity curve the exact same way. So if you're a boom and bust trader where you're making a lot of profits but giving a lot back, and you look at that equity curve and it's all over the place, very volatile, that might tell you that in the coming year, you should kind of take some more steps, practice better risk management, and also implement some more kind of strict selling into strength rules to kind of limit that volatility and kind of keep you in a straight line. You really want to optimize for a nice straight line and not give too much back during corrections. Also, you want to go ahead and review any time where your equity curve really spikes because that kind of could point you to a setup that's really optimal for your trading style. So definitely try to optimize that as much as possible. And when you're reviewing these equity curve spikes and dips, as I said, you basically want to ask yourself, what was happening in each of these instances? What types of setups was I trying? Was I looking too much at the intraday charts? Was I looking too much at the weekly? And basically ask yourself all these different questions to try to identify those trends in your own trading. So moving on, let's talk about how to review your best and worst trades. So basically this is very simple. You want to look at all your different trades, pick the 10 best or 15 best, as well as your 10 worst and 15 worst, and kind of put those in a pile and review those trade by trade and review all your buy and sell decisions. And when you're reviewing these trades, you more want to look at your decision making versus just the outcome of that particular action because a losing trade could actually be a good trade because you did all the correct things and limited your risk. For instance, if you had a gap down on earnings and you sold at the open, that would be a good trade because you're not letting emotions tell you that the stock's just going to recover. You're kind of just doing the right thing, trading well, and just cutting your loss as soon as you see that kind of character change in the stock. So remember to look at your decision making versus just the outcome. That's really, really important. Also, what you want to do is look for common mistakes and also strengths, and try to kind of keep a list of your common mistakes as well as your strengths. And basically, at the end of the day, in step 5, you want to kind of implement different rules that address these common mistakes. Also, as I mentioned previously, you want to think about what types of setups yielded your best performers, what kind of setups also yielded your worst performers if there's kind of a trend there. And with each of these trades, you also want to go ahead and retrade each stock, going kind of bar by bar, thinking about entries, exits, position management, stop loss management, and that'll be great practice that will teach you a lot of valuable things going into the next year. And similar to this, you also want to go ahead and analyze the market leaders from the year, pick the 10 to 30 best names, and basically create your own personal model book that you can go back and refer to in the coming years. And like with your own trades, you want to trade these names bar by bar, think about position sizing, stop losses, entries and exits. And this is really key. Be as intellectually honest with yourself as possible about where you get stopped out. And don't just use hindsight bias to say, oh, I should hold on because I know this 20% drop recovers. Think about how you would actually trade that stock in the moment, and be honest with yourself when you would exit and also where you would enter. And lastly, you want to go ahead and think about if you miss one of these opportunities from that year, what happened? What do you need to change with your current system, whether it's your scanning, weekend routines? So in the future, you'll catch more stocks like that opportunity. So for instance, with Net, it didn't have earnings growth. So if you're only scanning for earnings growth, you might have missed this. So think about scans you can implement to address that weakness in your system. And the last step to this post-analysis review is you want to reflect and identify your areas to improve. So you basically want to ask yourself these questions. How's your performance this year? What areas do you need to improve? Do you need to improve your routines, weekly, daily, post-market? You want to identify your strengths and also especially your weaknesses, and rewrite your rules to address these weaknesses. Finally, just reflect on your year. Are you satisfied with your performance? And what can you change to do better the next year? So with that said, here are some key takeaways from this video. Basically, a yearly post-analysis session is vital for continuous improvement year after year. It should be as comprehensive as you can make it. These are just kind of guidelines I'm going through and kind of the core of my personal routine. So feel free to add or subtract anything you want. And really key, as I mentioned, you want to be intellectually honest with yourself with reviewing your trades as well as the market leaders. Otherwise, it won't be good practice and you won't get that much out of the process. Finally, identify your strengths and weaknesses, especially your weaknesses, and really try to write additional rules to address those weaknesses. So overall, that's pretty much it for the video. Thank you guys so much for watching. If you enjoyed, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos. Thanks.